Good evening, everyone. Welcome to my gold update. Today is the 17th day of June, and we're going to be looking at gold. This is the daily time frame. No need to go over the monthly and the weekly time frames. Those are very, very bullish. For now, we're just trying to see what the market is going to do within the next couple of days. This is your daily time frame, right? So over here, we saw a pennant. Broke out above that pennant. Now, typically, anytime you see a pennant, what you want to see is, let me erase this a bit. So typically what you want to see is the breakout. You would have wanted to see a really nice candle up and maybe close above this high here. You didn't. What you saw was these wicks, which is not the best indicator, but all in all, you still broke above that pennant. So you still have to respect the pennant, right? So typically when this happens, you follow it from the most recent rally. This was the rally here. So again, like I said on my previous analysis, and that's why I really haven't done another video, because we're just waiting for this move here, right? So anytime you have a breakout above, again, you want to see that big long candle. We didn't see it, but with that said, we still saw the move above it, right? So now what happens when the market comes back down, you usually want to find some support maybe around this exact same area and then continue to go higher. That's not what it's doing. All in all, this move is valid above this area here, right? Because this is the low of the pennant. So long as we stay above this area, you're still clear. And you can actually say that within the smaller term time frames, you're kind of trying to go above, and more than likely this pennant will be valid and continue to go higher. If you look at the 4-hour time frame, I think that's the time frame I had before. If you look at the 4-hour time frame, here's the pennant. You have a breakout above that. You have a break. On the 4-hour time frame, you actually did close above this high here a few times. So that's one of the reasons why we might evaluate this as a breakout. Again, you want to stay above this area, and right now what we've seen is this is your high, this is your low, and really this becomes the most significant level. What you might be seeing here is an inverse head and shoulders, and if it does break above that area here, which again, that's what ultimately what we're looking for. I'll tell you what the bears are looking for. The bears are looking for this area here to hold as resistance, right? So this is what the bears are looking for, right? So you have your high, you have your low, high, low, right? So if we are going to create another low, it would be trading against this high. So all these folks that are got in here, they're shorting, they're trying to create another low. Ultimately, the smart folks are going to carry this low to around this area because they know they're going to find some buyers here. Although we've already captured some of these buyers around here. So again, these areas that we study, we just study where the buyers and the sellers are. We would assume that 99% of traders out there are computers, right? Or the big money out there is computers. So what ends up happening is all of these are filled with orders. Every time the market comes in here, it picks up some of those orders. Eventually, it'll drain all of those orders and the market will collapse, right? The market will break this level of support and continue to go down. As of right now, there's a lot of sellers here. And what we need to see is we need to see that there's more buyers here than there are sellers here. If that's the case, what will end up happening is the market from here will come over here, maybe come down a little bit, and then continue to go higher. I know there's a lot of folks are betting on. We just have to wait and see.